Hi, accounting students. If you're looking at this section, it's just going through some of the more advanced examples in cost, volume, profit. We will not be doing the linear program examples in the notes in this course due to the constraints imposed on us by our new online format. It's a pity because it's really interesting, but we're just not going to be able to get fitted in. So we're going to go and look at the notes. And the first example that we have here, you'll see there is a solution down below. We'll just focus on the problem itself. And so we're given 4 scenarios, and we asked to work out the missing numbers. We'll look at 1 or 2 of them, and then you'll see it's a pretty easy pattern. So what's important here to know is that you get this thing called the marginal income ratio, which is basically like the gross profit margin in traditional costing. So it's your selling price minus your variable cost, which is like gross profit, divided by the selling price. And that is obviously going to be consistent. In this case, it's 25%. So if we know the marginal income is 25% in this first example, and we know the revenue is $1,000, we know the marginal income's got to be 25% of that. In other words, $250. And therefore, the variable cost must be $750. And if we know the fixed costs, we know the profit. It's easy as that. Okay, next one. Not quite as simple, but same idea. We know the marginal income ratio, but we don't know the revenue or marginal income. But we can work backwards, because if we know the final profit and we know the fixed costs, we know the marginal income must be 600. And if that's 50% of revenue, revenue must be 1,200, and variable costs 600. Once you've got that idea, it's pretty easy. Here's another one, marginal income ratio of 50%. That must be 50%. That must be 1,000, which means that's 500. And what the fixed cost be to give us 300? Well, 500 minus X gives us 300. That's 200. Okay, and I'm pretty sure you can do the last one. Okay, so example 4 is about a guiding service. They have fixed monthly costs of $10,000. They have, in this example, they do a variety of different trips. They charge $1,000 per trip. They have variable costs of $200. They average 15 trips, but this can be as low as 4 trips a month in winter, up to 25 in summer, in the peak period. So what's the break-even number of trips? Well, we know break-even is equal to fixed cost divided by selling price minus variable costs. And so in this particular case, it's going to be equal to the 10,000 divided by the $1,000 revenue less the $200 variable costs. And so our answer is going to be 10,000 divided by 800 is 12.5. So obviously in the summer they're breaking even, but in the winter they're not breaking even. What would their peak profit be? Well, let's remember our equation. We are dealing with selling price minus variable costs multiplied by the trips minus the fixed costs. So in the summer, we have got $1,000 for revenue, $200 variable costs. We do dealing up to 25 trips, and our fixed costs of 10,000. And so 25 times 800 is 20,000. So our profit would be $10,000 a month in the peak summer months. Okay. So now this next question is the kind of crux of this problem. There are 2 further questions that are theory related. This next one, question D, relates to residual income, which is the idea that we won't just judge a manager on the return on investment, because they could have a very small investment center with a very high return on investment. We want to maximize profit. So residual income maximizes the profit for the investors. That is profit over and above their required rate of return. And then the last little question here, just so we know it, is whether you have a profit center, cost center, or investment center. Profit center is where you have control over both revenue and costs, therefore profit. Cost center is only if you have control over costs, like most UMF departments. And an investment center is if you've got control over both profits and the assets you buy. So if you're basically really in charge of what your company does. If you manage a Dunkin' Donuts outlet, you don't have control over the assets that are being purchased. So you would probably be a profit center because you do have control over marketing and therefore the amount of revenue, and you will have control over your cost budget. Okay, so getting back to number C. So in this case, they say their maximum capacity is 30 trips a month, and they normally fall 25 in the summer. But they've been approached by a large company that wants to do an executive trip. And they want to know what the minimum amount they should charge for this package deal. Well, they want 10 trips. Technically, they've only got 5 spare trips. So they would have to sacrifice 5 trips. Okay, and those 5 trips, they would be bringing in a total of, well, if we're looking at the revenue side alone, they would be bringing in a total of $1,000 on those. We could also look at profit, okay, but that's the revenue side. And then for the trips that they are going to offer that they wouldn't normally be, that they would, okay, so let me just explain this again. So they have 10 people that they, or 10 trips they need to fill. 5 trips, I'm going to bring those in. 5 trips, they only need to cover the variable costs because those are typically empty. Obviously, they would like more than that, but that's the minimum. But there's 5 trips that they would have to chase away existing customers that are paying $1,000 a trip. So in total, the amount of revenue that they would need to bring in is a total of, that's going to be 5,000 plus another 1,000, which is going to be 6,000. They need to bring in a total of 6,000, and that's on 10 trips. So the minimum that they need to charge is going to be equal to $600 a trip. Okay, which if you multiply it back out would bring us to the 6,000. Again, there are different ways of doing that problem, that you would probably still come out to the same answer of needing to have, or needing to charge a minimum $600 a trip. Okay, and that's the end of the slightly more advanced examples. As I said, there are some more information here related to transfer pricing and to linear programming, which we will hopefully get to cover in an additional class. Thank you very much, and we'll see you in the next section.